What's going on, everyone? Today, 66% of the S&P 500 closed down in the red, and it was a bloodbath as we saw some major tech stocks like Nvidia, Amazon, Tesla, Apple, Microsoft, Google, and so many others tank to the downside. In today's video, we're going to cover why the market's falling, what to know, and where the action is at right now. Once you hear everything going on, you're going to realize that tomorrow is going to be even crazier. So besides that, Tom, let's get right to it. We have a lot to cover today.
Yeah, the market went straight to the downside pretty much right from open today, and I had a little bit of optimism coming from last week after the SPY had that nice pop at the end of the day Friday, but as we know, the market has been volatile and pretty choppy, and once again today, we saw the SPY tank lower and actually broke below the lows of last week with a crazy drop-off there at the end of the day. Even more, I would say, Mike, a much larger move than that end-of-day move that we got Friday with the SPY. So we definitely have a lot of action hitting right now. And guess who's the culprit again today? Trump and his tariffs, right? Everybody was looking at the Trump tariff situation today, and Trump was actually scheduled to do an event with Taiwan Semiconductors with a $100 billion investment, and they did this. And then after the event, they started asking Trump questions like a press conference, and at the end of the day, they asked him about tariffs, and he was like, oh yeah, they're going into effect March 4th, just like we said on Mexico and Canada, and the additional 10% for China as well. So he came out with that, and that's what really got the market moving a little bit more today, and there was just a lot of headlines hitting where Trump took away hope for this last minute deal that people were talking about. And hey, it looks like this is set to hit here tonight at midnight.
That's the thing, Tom. So a bunch of investors are really nervous about this tariff news. The last time these tariffs were about to hit, they got, kind of like taken care of at the last minute. And that's what a lot of people were hoping for this time. But clearly that doesn't appear to be the case. Tariffs are something that the stock market certainly does not like because it adds more uncertainty, risk, fear, and just problems in general. And that's why we're seeing, the profit taking and selling that we are right now. Some things worth keeping in mind is that these tariffs that are set to go into effect tomorrow are far from the only tariffs that are expected to come in. On March 12th, we have steel and aluminum tariffs set to hit the market as well. And then on April 2nd, we have the reciprocal tariffs basically against like every country that tariffs us. So we are in for a wild next couple weeks.
Yeah, and then don't forget about the agricultural tariffs that Trump announced today too on foreign crops. So I mean, we're just talking like tariffs, and I'm sorry if that pisses you guys off because I'm sure that there's a lot of people out there who are tired of hearing about tariffs right now, and I kind of am too. But hey, it's getting the stock market moving, and we're seeing actionable moves coming from this. And today, I know if we go to the heat map, obviously tech was down a lot, and that fueled a lot of this downside pressure with the SPY. But even banks were red and oil was even red too. There was some OPEC news that sent crude oil even lower as well. But Mike, during these times of uncertainty, everybody's like, hey, what do I do? Do I just adapt to puts on the SPY, or what are some other options out there that traders can maybe look at here?
Yeah, so of course, puts are definitely a potential route. Of course, shorting shares works as well. Storing cash on the sidelines to buy all of the panic selling that happens during times like this is, also a smart move. But even looking at like shorter term, more tactical trades with tickers like SQQQ, UVXY, SPXS, and others are all potential routes as well. I know we mentioned these tickers a lot over the past few weeks, and I know some traders did very well with them, and as we continue to look at them right now, these stocks just crushed it today. Like UVXY popped up by 13%, and while that is amazing to see, when you zoom out on the chart and look at like broader time frames, you'll see that this thing can move a lot bigger than what we've seen today when we, do see like a real flush happen.
Yeah, definitely. Like some of these some of these crazy runs, like in the middle of last year in like July and August, we saw UVXY really pop off. And from that low to the high, it was up 217%. And then even some of these like shorter term runs are pretty insane, like 57% plus. And I think that there's definitely still room on this run as well, especially if we keep seeing the overall market just turn over as hard as it is. Like we're actually watching the SPY actively turn over, and it's approaching a pretty good low that we'll talk about in a little while. But if it ends up breaking this range, we're going to be kind of breaking a pretty good string of higher lows, which is a very bullish sign. And if that breaks, it would be turning things around to the bear side a lot more, in my opinion.
There we go. And yeah, I definitely look forward to diving deeper into this as the video goes on. But we also have to look at what's going on with Nvidia, because they are a big tech powerhouse and they are down nearly 9% today. So, of course, all of the tariff fears and profit taking play into this Nvidia sell-off. But they also had some pretty interesting news today where some silicon smugglers in Singapore have been arrested. So basically, especially over the past year, the US government has been clamping down hard on US chip companies because the US does not want adversaries like those in China from getting their hands on advanced AI chips like the ones that Nvidia designs. So basically, 18% of Nvidia's revenue actually comes from Singapore, but only 2% of their revenue have products that actually get shipped to Singapore. So it's kind of like a sus situation where there's, definitely some real risk of some illegal smuggling going on here, and some of these chips actually ending up in the hands that they arguably shouldn't be in. Basically, it looks like these smugglers are getting clamped down on pretty hard, and of course, it's not great news because this is kind of like Nvidia's like unofficial exports to China, which is now more at risk.
Yeah, that's definitely a negative in the short term for Nvidia. And I know that not even just this situation, but just the entire export control situation has been hitting them pretty hard. Even like whenever Biden was in there, we saw a lot of drops and negativity out of Nvidia's stock coming from headlines, specifically with those export controls and restrictions. So very interesting here, Mike. I know that there's a lot of talk about these smugglers and just other ways that China gets these chips. And, a lot of it's kind of off the books and unofficial, but we know it must be going on when people are getting caught like this.
Exactly. And here's the thing, Tom, when we look at Nvidia's stock, like, yes, a 9% down day is huge, but when you look at its chart, we see a lot of big candles with this one. So looking at Nvidia right now, what are the key levels to watch for the rest of this week?
Yeah, in the short term here, it actually is testing a pretty big low from last week, right around like 113. It moved below there a little bit today, but ended up coming back very slightly. At the end of the day, you guys can kind of see how that wick extends down there. That's going to be a big support to watch for the next couple days. If we essentially get under the low from today, around like 112.50, I will start to become increasingly bearish on Nvidia, and there's going to be a lot of big supports coming up on the daily chart to target. I really do like 108 to 110 is a pretty decent range, and then I'm sure people are going to be targeting $100 over the next few days as well, as it's only $13 away, and if we keep having 8% down days, I mean, we're only a couple days away from that.
Yeah, it's crazy. So keep a close eye on Nvidia. But Tom, we also have to talk more about this week's schedule because we have a lot on the calendar.
We definitely do, Mike. Today, we even had ISM manufacturing PMI, and tomorrow it's kind of hidden from the calendar here, but Trump's going to be addressing a joint session of Congress at 9 p.m. Eastern time. Between everything that we've heard from tariffs and everything, expect to hear a lot about that event tomorrow night. But then Wednesday, we have ISM services PMI, and then Friday, we have jobs data and a Powell speech. So it is quite the rundown. And then, of course, we have quite a few earnings this week as well. I mean, there's not a lot of Nvidias, but still a lot of big names.
Exactly. Yeah, so we're set for a super exciting week. We have like CrowdStrike, Marvel, Broadcom, JD, Costco, Rigetti, ANF, Target, so many stocks this week. So it's definitely going to be an exciting one. And shifting over back to SPY, Tom, of course, we are at some pivotal levels right now. So what are the key points to watch for tomorrow?
Yeah, I'm really watching this recent low on the SPY and recent bottom around 575. This is going to be crucial to watch for in the short term. If SPY starts to break this, it's going to be breaking this trend of higher lows. And to me, that's going to be a very bearish and telling sign in the short term. So I am going to expect maybe a little bit of bounce and maybe opposition there back to the upside. So just expect a lot of chop over the next couple of days, especially with all of these events coming out. But more specifically with, I would say, specific levels for tomorrow, I was really watching 585 as a good support today. The SPY ended up breaking under that with a lot of momentum, but now we're right back there to end the day. I'm going to keep watching that. 580 is going to be crucial, pretty much the low of day on SPY today. If that breaks down tomorrow, you have to watch it down. 580 is going to be a psychological whole dollar level to keep in mind in the short term. There are a lot of resistances. I definitely like 590 and 595. And then 600 the most. But SPY has been kind of stuck and choppy, so there's a lot of smaller supports and resistances kind of mixed in between these two.
No doubt. And as we look at the market right now, we can see just by looking intraday that we have very strong trends in both directions. It's just that the direction of these trends change pretty rapidly. So, of course, have stop losses, follow the money, and keep a close eye on the news. And that has really been the way to play the game, especially in the short term, and especially with all of this recent tariff news that doesn't seem to be cooling down one bit. So either way, keep a close eye on that. But looking at this month's intra-month seasonality, we can see that historically speaking, March does tend to be pretty strong, especially to start out, and it gets even stronger as like the month goes on.
Yeah, kind of like the opposite of February, right? In like the middle of February, we saw like a pretty bad pullback on these intra-month charts. But looking at March, it looks a lot better, especially at the beginning. It looks like as we get to like maybe March 6th through March 10th, maybe expect some flatness over like the next 6 to 7 trading days. But for the next couple days, we're kind of still at that beginning stage. So keep that in mind there. And then, Mike, I know we do have some post-election seasonality to look at too that I know that we just talked about March being pretty good, but in post-election years, it's pretty shaky.
Yeah, and it seems like just in general, the start of a post-election year tends to be just a little bit more stagnant and choppier on average. And it makes sense because, when you have a new president in, or when you have a president in for their first year of their term, there's definitely a lot of change that happens. And the president, of course, historically speaking, isn't as doesn't prioritize as much their re-election as they maybe will in like their third year or even their fourth year. So that could explain some of this data, but either way, it is worth observing that historically speaking, the market tends to be pretty choppy for the first few months, you can say, of their term.
Yeah, I think you hit the nail on the head there, Mike. And all I really have to add into this is I really can't wait for April and May. I think that's when when things are going to get really kicked off here.
There we go. All right, Tom. But before we can get too happy, we do have to talk about some pretty important economic / consumer sentiment / just consumer data in general. Unfortunately, credit card debt is at a record high of $1.21 trillion, and we are seeing the percentage of credit card balances that are 90 days or more delinquent at their highest level since 2011. It's currently at 11.3%, and it appears to be rising by the quarter.
Yeah, this is pretty striking, and we've talked about this quite a bit as credit card delinquencies and stuff have been pushing higher, but just to, hit at it again, the highest levels since 2011, that's a pretty big thing to say, and, we haven't really seen, like, a big uptick in this with this whole situation with these 90-day plus delinquencies since, 08, 09, right? That was pretty rough, so I don't know, maybe we're seeing a little bit of, a foreshadowing of what's to come. I sure hope not, Mike, but this is definitely a piece of data that is a little bit scary, and it shows people obviously are not paying their credit card bills, so the consumers must be getting hit at least fairly hard right now, and inflation can be tied into this as well.
No doubt. So either way, that's just information worth keeping in mind. But besides that, Tom, let's jump right into some setups and predictions. A stock that is close on watch for me right now is Apple, and it is to the downside. Not only has this stock been showing weakness in the short term, but we do have the tariffs set to go into effect tomorrow on Canada, Mexico, and China. China is currently the, country that has been hit by tariffs the hardest so far because the Mexico and Canada deals have essentially been postponed until tomorrow, where China's tariffs are going to go from 10% to 20%. China has been not the friendliest with these tariffs, and if we do see China snap back, that can definitely sour U.S.-China relations, of which Apple has a decent amount of exposure to. Looking at Apple, again, their stock has already been weak, so I'm looking at this in a bearish way, not only just for tomorrow, but especially throughout the rest of this week. And this downside move can be intensified if we do hear China snap back from the increased tariffs that are set to be put on them.
That is actually a pretty interesting thing to think about, Mike. And I'm thinking of all types of scenarios here. Like, what could they do to Apple, right? There could be scenarios where they end up coming back with like an investigation because of some data stuff, or announcing anything. Like, there could be all types of stuff that they could possibly do, and especially with snapback tariffs and reciprocal tariffs and everything along those lines as well. But I'll definitely keep it on the radar, Mike. I know that we've looked a lot at AMD in the short term, and it's kind of coined a new name, Advanced Money Destroyer, and today it stuck to that name, falling under $100. And Mike, $100 has been kind of testing at the end of last week with AMD. It fell under a little bit this morning. It tried to hold, but I would say this close, I'm going to call it an official break right now. This was a huge level on AMD. We can see on the Bookmap, there was a lot of buyers stacked up here today. So if we continue to see bearish price action under $100, I'm going to keep looking at AMD to the downside. There are some buy walls stacked up around 95 that I think we could look for once we get back under 98. But I'm definitely watching AMD down with tech. We're seeing a lot of bad pullbacks in the tech sector, and AMD is not hiding from it.
Just a year ago, Tom, the stock was trading for like $230 a share, and here we are back below 100. So we are definitely seeing some serious weakness there, and I will definitely keep it on my radar as well. But another stock that is definitely on watch is Tesla, and I'm actually looking at this one in a potentially bullish way. Of course, we are seeing a lot of profit taking right now, so if the market opens up tomorrow and everything is selling off, then don't try and catch a falling knife here. But assuming the market can, stabilize a little bit and maybe even put some pressure on some recent highs, then Tesla does have potential for like a dip buy style setup. It's very close to that $300 resistance level, and it did get past that numerous points today. It was not strong enough to actually hold above it, especially with the tariff sell-off that we saw, but the stock is holding that support right around like 276 per share, just that area in general. So Tesla is on my radar for a potential bullish play tomorrow, assuming, the stock can stabilize and just like hold this area of support.
Yeah, definitely. If it gets back above like 300 as well, that would be a really good thing to see in the short term. So I'll definitely be watching for Tesla and watching this support around like 276, 280. Like you mentioned, with my next setup, I'm looking at GLD, which actually recovered up very well today. And at the end of day, went on a pretty nice run, closing up 1.3%. And gold has actually been pulling back a lot in the short term. We can see GLD went on a pretty historic run here to kick off 2025, and then now we're starting to see a bit more pullback come into play, but we're recovering back. So I am watching gold back to the upside with this recovery. I could see people trading gold to the upside, especially with all the uncertainty right now between tariffs, between Russia and Ukraine and Zelensky and that whole situation. I think that that's also playing a big role into what is fueling this gold run. But overall, 1.3%, and we're seeing some good flows coming back in a little bit, Mike.
Definitely, yeah. People definitely been buying up gold as like kind of like a hedge with all of these tariff risks, and it's definitely nice to see that bid today. So either way, GLD is definitely on my radar as well. But besides that, Tom, let's jump right into today's momentum plays, and with the first one, we have QBTS to the downside.
Yeah, there was a lot of downside action today. If QBTS can get under $4.80, keep watching them down. It was pretty rough to see them below $5.
All right, with the next one, we have ARM also to the downside.
Yeah, big tech stock. If they break under 120, which is a pretty good psychological support, then watch them to the downside as well.
Alrighty, and then with the last one, we have HIMS also to the downside.
All three to the downside today. HIMS is actually at a pretty good psychological level of $40. So if they break under $39.75, then keep watching them down.
All right, so we have HIMS, ARM, and QBTS all on the radar for potential downside moves tomorrow, if and only if they break through the levels listed. The stronger and more consistent these stocks move, the better and stronger the setups become. Have stop losses to protect yourself, especially in this market, and adjust with the trend changes as they happen. But besides that, it is now about that time for today's $1.2 million big money trade. And we are looking at ticker symbol NEE. Today, the big money bought the 75 strike call options that expire on April 17th of 2025. NEE is an American renewable energy company. It has been pulling back a decent amount over the past few months and is in the process of bouncing off of some recent support levels. Looking at NEE and these call options here, it's nice to see a $1.2 million trade like this. It doesn't have the most amount of time ever, and these call options are a fair bit out of the money, which certainly increases their risk, while at the same time increasing their potential reward in the event NEE can have a substantially, decent up move. Looking at the stock right here, it had a pretty good day today. I certainly like the price action, and I think it's definitely worth keeping on the radar.
Me too. This base that's forming is fantastic in my opinion. I love the $69 support, and it's almost setting up like an inverse head and shoulders pattern where we're kind of getting the head forming there, but I really do like that $69 support where it just held, and we've seen a few good bounces off of this 69 level while it's been trading within this range. And with that price action today, I would not be surprised if it was able to rip above this recent resistance right around $72, which is a pretty good recent peak. So I definitely like it to the upside in the short term. I know it seems a little bit scary with the $75 strike, but realistically, if we do break this recent 72 resistance, we won't be very far off from 75.
Yep, so either way, keep it close on watch, but as a quick side note, if this is your first time watching a Stocked Up video, welcome, and consider destroying that subscribe button. We post brand new videos like this one all the time where we cover the big money trades, earnings, the schedule, important news, and charts to keep on your radar every single day. It takes us hours to make these videos, and if you subscribe, you'll get them recommended to you more often. A lot of times we cover charts that you never otherwise see as well, like the seasonality ones, the credit card data, and a whole bunch of other stuff. So if you're new, consider joining the Stocked Up crew and obliterating that subscribe button. But we also have to give a giant shout out to today's member of the day, MetaMan, who had a great post in the Profits channel showing some great gains on the day, as well as shouting out the trading floor and Bookmap. So huge shout out to you, MetaMan. Keep up the great work, and it is awesome to see posts like this one. If you guys are into short-term trading, of course, the Stocked Up trading floor is great, but also definitely check out Bookmap, especially in market environments like this one. We could see right here in the chart, we have some advanced money destroyer with some key levels, and Bookmap is basically like the x-ray vision of the stock market, where you could see quite literally exactly where key buyers and sellers are stacked up at. So if you haven't used it before, it's certainly worth trying, and Stocked Up viewers do save if you use the link down below. So the link will be the first one in the description and the comments down below. Highly recommended to try it, especially if you haven't already, and especially in market environments like this one. But besides that, Tom, I'm pretty excited for the week, and I think we should see a lot of big moves, not only tomorrow, but all week long.
Yeah, and tomorrow's going to be just such a crazy day, guys. Do not forget we have the tariffs hitting. I'm sure there's going to be a lot of news with that. Trump's going to be addressing Congress tomorrow night at 9 p.m. Eastern time. So be ready for a lot of headlines and flurries tomorrow night after the market closes, of course. And be careful holding some short-term positions overnight because you never know what might get said. So just keep that in mind over the next couple trading days. That's going to be a pretty big event that I think has been going kind of under the radar here.
Yeah, no doubt. So thank you all so much for watching. Again, definitely make sure to subscribe and check out Bookmap down below. It's awesome, especially for markets like this one. Thank you all so much for watching, and let's crush it in the market tomorrow.